pressure is a fucking myth. These things are controlled, and the market will offer that price to allow what? Trading to occur at those prices. If a lot of sellers come in, like think about it. You watch these people say, "Oh well, all you got to do is watch the level 2 data, and you'll see ICT's bullshit about an algorithm is all made up. Just watch the level 2 data." You're watching spoofed orders. You're watching shit that is not going to have any impact at all on the direction of price. You're just going to watch fluctuations. That's it. That's all you're doing. You're watching fluctuations. The delivery, the continuity of that price delivery is what I'm talking about. That's the part you don't understand. You have no idea what I'm referring to. And as many times I've said it, you have your fingers in your ear, you're plugging your mind up like you don't want to listen to it. You've already convinced yourself that this is no way possible. And I'm taking it back to the argument. If it's not this, then how am I able to do it? And that's why I tell people, spend a year with me. You're going to see things that makes it undeniable. You'll also see the cycles that come through in the marketplace. You'll see the seasonal tendencies. All those factors will build on your understanding, and it'll help you fortify the confidence that you need. You're going to need that shit as a trader. But guess what happens? When you see it and you trust it because you've been here so many times before. Moments ago, I said every day, if you understand the concept of liquidity, everybody can say, oh, of course, there's stops below an old low. Of course, there's stops above an old high. Everybody fucking knows that. Yes, yes, I'm sure they do. But they don't understand how to use that as a setup that repeats every fucking day. And that's what I'm teaching you. That's just one setup. All you have to do, write this in your journal right now, okay? For you to quit your fucking job, to quit your job, all you have to do is find something that repeats every day that can yield you 5 handles. Here's the easiest, most straightforward ICT lecture. Ready? Watch price in the morning between 9:30 and 11 o'clock. Wait for price to run through a liquidity above or below. Don't even have a bias. You don't care about a bias. I don't need a bias. I teach you because it's better for you to work within a higher time frame directional bias. It's easier to trust and see the setups because as a new student, there's just so many things to consider. What swing high do you use? Which dealing range do you use? You know, what order block? What's fair value gap? How do you know when it's going to? You can see how fast this compounds and inundates a new student. I understand the frustration, but there's no shortcutting the experience of watching it live, and then you'll find your own model. But if the brass tacks was laid down, here it is. This is it. If I was to go back in time and say, okay, I know nothing. I know nothing about optimal trade entry. I know nothing about the model 2022 that I gave you last year. All I would be looking for is I want to see an obvious run above a high or relative equal highs and then reject that. I want to see an opposing liquidity pool. I want to see it move sharply in that direction. Once it does that, any fucking fair value gap, any of them, once that occurs, as soon as it trades into fair value gap, I'm using that. I'm putting a 5 handle stop loss on it, and I'm waiting for it to rip. 5 handles, half my trade's coming off, and then I'm waiting for it to trade into the opposing liquidity. There it is. And in 90 days, I'm quitting my fucking job. That's not me saying you're quitting your job in 90 days. I'm just saying I know that repeats. Knowing what I know right now, if I can go back in time and tell myself this is the thing that's going to repeat every fucking day, it's literally no effort. It's no effort. None. Zero effort required to do that. But you don't know that it repeats. But now because I told you, you're going to go into your charts and say, oh shit, that's there too. Yeah. And I have students that trade models very simplistic, just like that. You can make a model very, very complex. And that's exactly what I did in my mentorship because I knew people were leaking it. Those models fucking make money, but those models demand a whole lot. They can be coded and automated, so you don't have to really worry about them. But I can also make a very, very simple elementary approach to it, like I just gave you here and what I presented in detail in 2022's mentorship on my YouTube channel. I can make it very, very simple. But even when it's most simplest delivered, if you don't know the experience behind its development, how often it forms, how you engage it, what is it you're looking for, just because I say put a stop loss on the trade for 5 handles, do you know what that means? Where are you going to place your stop? Because you have to know where you're getting in at. Where are you entering? What's your multiplier? What's the PD array that you're using for the setup every single time you take the trade? If you're going to use the fair value gap, you're going to put your stop, if it's short, you're going to put your stop loss above the candle that makes the fair value gap. If you can't do that with 5 handles, can you take the trade? Well, that depends. If you can trade it with a micro, you can take the trade. But if it's more than 5 handles, even with, and then I can't imagine a trade that you can't do at least one micro because that's not even that much money. But a micro is $5 per handle, not 50 like a mini. So what are you risking? You're risking $25. That's not much money at all to most of us. But there are people that I've trained in impoverished nations where $25 is a whole lot. But that repeats every day. And while you might need to learn how to do it with setups that risk $25 to make $25, condition yourself with seeing that pattern that forms every single day. The problem that you realize once you know how to trade is that you were told you can't make money with one-to-one when you can. That's what high frequency algorithms are doing all day long. Some of them are doing less than one-to-one. They have a negative. They're trying to make less than what they're risking because their frequency of entry is so high paced. And the thing that they're utilizing for a catalyst that gets them in the trade and get right back out of it, it repeats so often, it doesn't care. The creators, the coders that utilized it and implemented that logic, they don't care about the 35 or 40% losing. They don't care because they have that statistical edge of 60% of that high frequency order flow in their favor is going to compensate over time, even on a day by day basis. What happens more frequently? A 30 handle run intraday, one way, or 6 5 handle trades, multi directional. I don't care how big the daily range is. 6 5 handle trades is going to happen more frequently than a one pull single run of 30 handles in the same day because there's more fluctuations in price than there are sustained 30 handle runs in one direction. One directional runs, 30 handles, there isn't a lot of them within the same day. But there is multiple deliveries of 5 handles up, 5 handles down, 5 handles up, 5 handles down. All of that intraday volatility is what high frequency trading algorithms capitalize on. Here's what you're being lied to and being told that the algorithms are causing that to happen, and they're not. They're engaging in that delivery of price. And the disparity between where price was 5 minutes ago and where it is today, or next 5 minutes, that is what it's capitalizing on. So how many intervals of 5 minutes occur over the span of a trading session? A lot. And these high frequency algorithms are constantly plowing through that, harvesting all of these minor fluctuations. And you're out here trying to get 20 pips a day, 50 pips a day, 280 50, pips in an hour. it's it's not needed. All you need is something that repeats over and over and over again. I literally had people clowning me saying, "Oh, you talking about five handles, dude. There are fucking algorithms that only take one handle, and they do billions of dollars a year. That's how much they're taking out because they're doing transactions and transactions and transactions all fucking day long in multiple markets, constantly boom, 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 boom. That's just the way they're designed to do that. They're like the credit card company. Every time you swipe that card, that merchant has to pay that credit card 50 cents per transaction. That's the middleman. Well, these algorithms are being the middleman for a lot of your trades. They're not the market maker, but they're utilized as what? The counterparty to you. So when they say, oh, there's no liquidity, that's a lie. There's lots of liquidity. There's lots of buying and selling interest out there. But that buying and selling interest is not buying and selling pressure that pushes price up and down. There is a disconnect there. And it's because you're being indoctrinated to believe that these markets are being pushed around because of the buyers and sellers. That's not what's going on. The buying and selling around these price levels is, well, limited to whoever wants to buy and sell at that time. Price is going to be offered continuously higher up. If the algorithm is going to be doing a repricing to an old high, an intraday high, and it's already done its run for the day on the downside. So now it's going to just reprice, keep going higher, 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 higher. You have seen these days before. When I was first starting out, I lost a lot of money fading that. Every time, there's no way it's going to keep going up. It's been going up constantly, slowly, all day long, tick after tick after tick, no retracements. It just keeps going higher, higher, higher. What's going on there? The market's just perfectly balanced with buyers, and they don't want to ever see it retrace, ever. It just constantly just makes a small little incremental move higher, higher, higher. That's an algorithm. That's what's going on. And look at the depth of market and the level two data when those days occur. It looks like any other day. So please stop with the bullshit. Don't tell me I don't know how to fucking use depth of market ladders or level two data. I know that shit, man. I know it. And it has absolutely no fucking bearing on what price is going to do. You're watching a gimmick. That's a red herring. You're watching something and believing that's what's causing the markets to go up and down. And it's not what's going on. Sorry to burst your bubble, but that's just the way it is. And the sooner you wake up to that, your perception about price and how these markets book will instantly change. And the things that you're fearful of and concerned over, oh, the market's going to do this or the market's going to do that. No, they're not. They're going to do the same thing they do all the fucking time until there's manual intervention. When somebody says, okay, we need to set this apple cart upside down and upset a whole bunch of bullshit, unexpected rate announcement, a surprise rate cut, or a surprise rate hike, a war event breaks out, a pandemic begins, something that was unexpected, which is referred to many times as a black swan. A black swan event is an event that no one knew when it was exactly going to happen. And it's a surprise and shock to most people. And it's going to send shockwaves through the marketplace. That's a manual intervention. A manual intervention is when the euro and Swissy was depegged and it wrecked people and brokerage firms. Literally instantly wiped out, insolvent. That's manual intervention. That's the risk that you and I incur every single time we speculate in any market. Anytime there could be a massive upheaval in these financial instruments that is either organic or synthetically engineered. Either one can wreck you. Either one is unpredictable. And that risk is the only risk that I really fear. I don't fear doing a trade, getting it wrong, and losing money because I know what I look for repeats.